Hi, my name's Amanda Hahn.
And I'm Matt MacFarland, and we're with Keystone CPA.
We are CPAs by day and real estate investors by night, and you might have seen us on some of the BiggerPockets podcasts or read some of our blogs.
You might also read one of our books we wrote for BiggerPockets called The Tax Saving Strategies for the Savvy Real Estate Investor.
So we're really excited to be here with you today to talk about how to avoid taxes with your real estate investments. And why is this topic important? Well, because the Tax Foundation came out with a research result that said that the average American loses more money to taxes than we do on food, clothing, and housing combined. So think about it. The vast majority of where our money is going is towards taxes, like federal income taxes, state income taxes, payroll taxes, what else? Sales tax?
Yeah, I mean, it's crazy, right? So, I mean, let that sink in for a second that you are losing or spending more money on taxes than three of your biggest expenses, food, clothing, and shelter, right? I mean, that's, even for a CPA, that's crazy.
Yeah, and so that's why we're here to talk about how to avoid doing that. But, before we start, I think one of the things that a lot of people, when we talk about minimizing taxes or avoiding taxes, some people almost feel like it's wrong. It's like cheating the government. But
not everybody, but some people.
But the fact is that the government actually incentivizes real estate investors to take advantage of these loopholes. And the reason is because they want to incentivize us to invest in more real estate and to help the community. So it's definitely not wrong to do it. And it's highly encouraged that you take advantage of a lot of these loopholes and benefits that the government has designed specifically for us.
Right, because you guys have probably heard that expression out there, or you've heard people talk, right, that business owners get so many write-offs, right? Well, the thing to keep in mind is that you as a rental property owner, a rental property investor, you are a business owner too, right? So it's time for you to take advantage of all the loopholes that are available to you.
When it comes to real estate or rentals specifically, right, we rarely see people miss out on the common deductions like mortgage interest, property tax, maybe management fees. So these are things generally investors, remember to deduct. But one of the most common mistakes that we actually see is real estate investors missing out on a lot of these overhead expenses that are still related to their real estate, but just not be specific to any given property.
So like examples would be like travel costs. So you're going to travel to look at properties, or you're going to a conference, or, business meals. You're taking a potential investor out, you're taking a realtor out to lunch to talk about
taking a CPA out
to lunch, dinner, breakfast, baseball games, whatever it could be. Home office deduction. These are great examples of things that we as CPAs see overlooked really, really often.
Yeah, and also don't forget educational expenses too, right? If you paid for a BiggerPockets membership, or you bought some books, or attended a real estate conference, these are all expenses related to your real estate and can potentially be tax deductible as well to you as an investor.
And I think one of the reasons they're overlooked is that people, sometimes they don't know what they can deduct, right? So that, again, they know about mortgage interest and property taxes, but they forget about these other things. Sometimes people think that it doesn't add up to very much, right? It's, okay, it's $100 here, $300 there, whatever. But in our experience, again, seeing lots and lots of tax returns every single year, is these can add up to thousands and thousands of dollars of deductions. And if you're somebody who's in, 40, 50% combined federal and state tax rate, I mean, $5,000 deduction could save you a couple $1,000s in taxes, right? So you can see how the power of these can add up very, very quickly, and you want to make sure you're taking advantage of them. Don't overlook them.
Yeah, and another great benefit of using real estate to reduce taxes is, unlike most other investments, real estate or rental real estate specifically, the law allows you to take a depreciation write-off every year on the rental property. And that's something that you don't really see with stocks and other types of investments.
Yeah, they allow you to take this write-off under the, kind of the premise that the property has got, normal wear and tear every year, right? That is depreciating in value. Obviously, as investors, we all hope that it's going up in value. But for tax purposes, you get to take deductions every year as if it's deteriorating in value. So let's go over an example, right? I think that's probably the best way to look at it. Let's say you go out and buy a rental property rental house for $350,000. Now, for tax purposes, when we buy a property, we've got to split out the purchase price between building and land. The land we can't take depreciation on, but the building we can. So in our example, $350,000 purchase price, let's say the land's $75,000, building's $275,000. Now, in a residential rental property, for tax purposes, you write that off evenly over 27 and a half years. So what does that mean? Well, your $275,000 building is going to provide you with a $10,000 tax deduction every single year. So think about that for a second, right? So let's say you've got $10,000 of positive cash flow that you would otherwise be paying taxes on. Well, with this $10,000 write-off, now you're down to zero taxable income from that rental property. I mean, that's pretty powerful.
Yeah. And that's really important to make sure that we're using deductions, we're using depreciation so that we can keep all of the cash flow and appreciation that we're earning through our rental real estate, right? And what's phenomenal about tax savings is it's not just about paying the least amount to the government. It's also about utilizing a way to supercharge your wealth, right? Because think about it, if you saved $20,000 in taxes, you can use that as a down payment and buy $100,000 worth of real estate, right? So think about the power of that. If you can do that every year or every couple of years, how much faster you can reach financial freedom by doing that.
I love that. That's great.
And I feel like, investors are always looking for more money to invest, right? That's a common thing we hear all the time is, where can I get money? I could buy more properties if only I had more money. So in addition to just bank financing or partnering with other people, why not first look in your own pocket, right? Because if you can save money on taxes, that's more money of your own that you can invest in real estate. Tax savings, actually, the way I look at it, it could be one of the easiest monies you ever make because you already made that money, in fact, right? It's just about keeping it.
Well, please make sure to like, comment, and subscribe to BiggerPockets video series.
Yeah. And don't forget to check out our books on BiggerPockets.com. Our first book is called Tax Saving Strategies for the Savvy Real Estate Investor. And if you want more tax information and tax updates, feel free to visit our website at KeystoneCPA.com.